Good morning, everyone. It's Dan Basse and Ben Buckner back with you to discuss grain markets. Some news overnight had, of course, the Chinese placing, we call it retaliatory, I'll call it retaliatory, but they're anti-dumping duties against our friends in Canada. This is on canola, 75%. So that virtually shuts down, if you will, the Chinese-Canadian canola trade. It has already been in somewhat trouble, but this is kind of another blow, and that's what's pressuring soybean oil prices this morning. But also in the background, we did have U.S. President Trump signing a 90-day extension of tariffs, the existing tariff rates on China. So Trump was not able to, of course, get the quadrupling impact of soybeans that he was hoping for. I think he was hoping for some kind of late deal or concession from the Chinese, which did not happen. Grain markets saw that as negative. We now have pushed down the tracks, if you will, the U.S.-Chinese trade negotiations. I still cannot find any interest from China in the U.S. soybean or grain markets here this morning. Told they're not even asking for offers. So, Ben, what can you tell us about crops? It is a USDA crop report day. Lead us down the lane of what the markets will do, at least heading into the number.
Yeah, let's dive into some fundamentals. And to your point, Dan, canola crush is going to have to be higher, I think, now in Canada. And some of that stuff will find the U.S. market, adds to already large U.S. soybean meal supplies. But our sort of normal run through on Tuesday morning is the same it's been for the last really 4 or 5 weeks. Crop ratings in the U.S. stubbornly high, not really following seasonal trends lower. And like we have said before, I think that's telling us something. I know there's nuance to these yield models, but it does seem to be a very, very special crop still. U.S. corn crop, 72% good to excellent. That is down just 1 point from last year. And still the same thing, the highest since 2016, seventh highest ever. Yield models will put potential, 185 to 190 still pretty easy. You can see historically, going back to 2000, that this is this very special crop. How big is still the mantra from us. And we'll start to decide that by our crop tour, which kicks off tomorrow, I think, in Illinois and Iowa. Soybeans, also very similar. We're now matching last year, 68% good to excellent. That compares to average, though, of 62% good to excellent. We're looking at places like Iowa, Wisconsin, Louisiana, crops rated, 80% good to excellent or better. So historically, again, on the right, going back to 2000, there just aren't many years that we can compare this to. And those years that we can compare to, final yields are up, 1 to 18% better than trend. So somewhere in that range is, I think, where we'll end up this year. And so that is a higher yield than USDA is forecasting today. But also, I want to jump to the ancillary markets as well. We talked about sorghum before and just the heaviness of cash feed markets, we think, especially during the autumn and early winter. Sorghum's kind of mirrored corn, and that hasn't changed for 4 weeks. It's 66% good excellent, not dropping seasonally. That is tied for the highest since 2015. And like corn, soybeans does look to be a pretty special sorghum crop. When we look at years like 2015, 2019, well above trend. 2015 was 22% above trend. 2019 was 3% above trend. I think maybe that's one of the sleeper surprises in today's report is maybe USDA or NASA is kind of forced to raise sorghum yield by 2 or 3 bushels an acre. China's not buying anything, so that will add to existing sorghum stocks, which already are pretty heavy. We've talked a lot sorghum prices in parts of Kansas below $3 a bushel already. Not really getting into that sort of need to encourage demand yet, so it's going to be a pretty heavy feed market again. I also wanted to, again, take some time just to think about, we're at AgResource, we're very long-term risk management. What's on the other side of this? What's on the other side of the September, October crop reports? How do we get rid of this stuff? Does it happen quickly? Is there a new supply threat in the Southern Hemisphere? And it's where we'll turn our attention to next. And the latest forecast from the Aussie Met Bureau, they're the best at doing this since it affects their livelihood more than anywhere else. Pretty rigidly neutral INSO conditions for at least the next 5 months, maybe 8 or 10 months. So ocean temperatures in this small part of the equatorial Pacific, according to the Aussie Met Bureau, almost exactly normal. And so that tends to bode well for things like Australian wheat production, Argentine wheat production, maybe even South American weather, Argentina, southern Brazil, during the planting season. And I think I'm mentioning this because we're already seeing this play out. So Australian soil moisture ranking percentiles on your left. Dry in southern Australia, but that's kind of about it. Soil moisture adequate to abundant. Today, everywhere else, especially in Western Australia, The 10-day forecast on the right, not a lot of rain in the eastern part of the ag belt in Australia, but more soaking rain in the west. That is the largest canola and wheat producing state in Australia. So we've kind of done some research, like the US almost, the climate pattern in Australia is really set up maybe July, August. So I don't think we're looking at drought in Australia this year. Probably a very big wheat crop, probably a very big canola crop. I think this is kind of what's new and not market sensitive at all at this point, but it is something we want to highlight. The same is true. If you don't have La Nina or El Nino in Argentina, you tend to not have major climate threats. July was very wet in Argentina. Soil moisture ranking percentiles on the left, mostly very good. There are some issues to be solved, but thinking about wheat, half of Argentina's wheat crop is produced in Buenos Aires province. Abundant soil moisture there. And on the right, 6 to 10 day forecast, you've got some probably soaking rain impacting everywhere but La Pampa. So, it's a long growing season. The wheat doesn't really matter until probably September 1st onward. Corn, it's maybe October onward. But I don't think water is going to be a problem in Argentina in the early part of the growing season. That's kind of unique to the last several years. So I think the message to us is, we've got the August WASDE today. Cash markets are going to be pretty heavy. Yields are going to be very high. But is this also a year in that Southern Hemisphere, second consecutive year of trend yields there, from Australian wheat to Brazilian soybeans to Argentine corn? It adds to things. So it's something we're going to start paying more attention to. Does Mother Nature continue to cooperate so that it's something else that's in the background?
Really good rundown, Ben. I appreciated all of that. And, I like to look ahead in what's coming down in South America and Australia. I think that's very important. But today it's about the USDA crop reports, and we're going to be very myopic on yield. Are we above 184 on corn, and are we above 53 on beans? I think those are key. But in the background of all of this, I want everybody to remember, we do not have any Chinese demand. So if we have a big crop and no Chinese demand, that's the weight in the market nearby. Any closing comments, Ben?
I think that's it. Yeah, it's all WASDE today. How we'll fight about what the exact yield number is. But I think the risk is, like I said, 184 or better corn yield, maybe 53 or better soybean yield. Stocks will be getting bigger. That's kind of the beginning of that.
Good luck with the USDA report, everyone. We'll be back tomorrow to give you some analysis and dial it all in and tell us where grain markets are going longer term. Be well.
Bye-bye.